Hey guys, Eric Bramlett with Bramlett Residential. Hope everyone is having an amazing start to your week. Today we are going to discuss the Q1 Austin real estate market statistics. But before we get started with that, there are a lot of folks that read the newsletter and watch our videos that are in the real estate industry, real estate agents, loan officers, inspectors, folks like that. And I want to invite everyone to a webinar that Max Lehman and I are hosting on May 8th at 10 a.m. We will discuss the unique challenges and opportunities in any real estate downturn. Max and I were both pretty young whenever the 2008 great financial crisis happened, but we were both in the industry then and we kind of muddled through it. We're going to talk about what we are seeing today and what we think the similarities are and the differences are and whatnot. So again, May 8th, 10 a.m., there'll be a link in the newsletter and there's a link in the description here. So let's go ahead and get started now. We are going to chat about the Q1 results. It's always good to look back at a bigger data set than a monthly data set, and so that's what we've done here. Quarterly results are obviously 3 months of data, and it gives us kind of a higher level look at what's going on with the market. So one number we don't talk about a whole lot, but we're looking at here is sold volume. And the reason that I want to point it out is that's a direct effect of the mortgage rate increases. And you can see here that there was 33% lower dollar volume sold in Q1 2023 versus Q1 2022. And again, it's because mortgage rates went up, and you can see that as a function, prices dropped, rates went up, but the same home in Austin is now a little bit more expensive than it was in Q1 2022. And again, that is the effect of the Fed's monetary policy, which a couple points away from that, it makes mortgage rates go up, causes buyers to have less buying power, prices go down, units go down, and as a result, the overall dollar volume sold goes down. So beyond that, what else has changed? Well, the time to sell a property is 200% more, which means it's almost tripled, or actually has tripled. So that's an expectation that sellers and buyers both have come to terms with. When sellers go on the market now, they can expect it to be a process that's going to take a couple of months, not a couple of weeks. You're going to see that the average sold price did not decline a terrible amount. It only went down by 9%, but total sales went down by 26%. What ends up happening, a lot of sellers that can't get their price will simply withdraw from the market rather than go down to a price at which the current market can get. And that's why one reason why real estate prices are generally pretty stable. Withdrawn and expired listings are going to go up, so they're up by 300%, meaning that they're almost 400%, over 400% of what they were in 2022. So these are all things that everyone just has to come to terms with as we say, okay, we're kind of in a downturn. What's changed? Well, prices have come down a little bit, units sold have come down a lot, and withdrawn listings have gone up a lot. So that's what's happening, and we think that Q1 is going to be sort of the low point in this downturn. We think we're going to go up from here. And one reason we believe that is the good news is that dollar volume pending is down only 19% year over year. So we put a lot of properties under contract in Q1, which is a great thing. Q1 starts to speed up, and then you see those close in Q2. So more than likely in Q2, you will see the dollar volume sold will not be as dramatically lower as it was in Q1, and you're going to see units sold will be lower than last year, but will be better than Q1. So we think things are going to be trending in the right direction. On that note, let's look at leading indicators. So the thing you can look at that directly affects the market more than anything is simply 30-year fixed mortgage rate. And that has now been stable since November, and you can argue that it's been stable since last September. So we want to continue to watch that. And whenever we see that rate start to go down, you can be pretty confident that the market will start to pick back up. What affects the mortgage rate, more than anything, is the Fed's monetary policy. And the Fed seems to have one interest in mind only, and that's to combat inflation. And so we look at the CPI report, and we have it here charted over the last year, and you can see that it's been trending in the right direction since Q1 of last year, and it's going down, down, down. So CPI report is going to affect how the Fed behaves, what they decide to do with increasing the Fed rate, lowering the Fed rate, or keeping it the same. We know that we're coming towards the end of the Fed rate hikes, and so we want to see the Fed just stay at the current rate, and then we want to see them start reducing their rate. And you can predict when that will happen based on, how well they have inflation under control. And again, that's the CPI report, which is released every month. More leading indicators. So we look at the United States Consumer Confidence Index, the CCI, and this has been pretty sunny. I mean, this has been, it's been pretty good since the low point of last July. CCI tends to follow the news cycle, and if you remember, whenever inflation was in the news the absolute most was last summer. Bad news, bad economic news everywhere, and that affects the Consumer Confidence Index. Since then, it's increased, so we don't feel like this is a problem. We just need to see this stay where it is. It doesn't really need to improve that much to have that component, I guess, solved for Austin's real estate market. But what is unique to Austin, this isn't unique to the United States, because the Fed, very, very upfront about the fact that they wanted to slow down the job market because the job market stayed really strong well into the Fed rate hikes. So they have slowed that down at a national level. But what is unique to Austin is that we generally have one of the strongest job markets in the United States, if not the strongest job market in the United States. Now, that hasn't changed. It's just that the job market everywhere has slowed down considerably, but we're affected more by that than probably other markets because we're so used to people moving to Austin for jobs. And that's really slowed down considerably. If you look at the number of postings on Indeed, it started slowing down last August, September, and it stayed relatively low. We need to see this number come back up in order for Austin to return to its regular killer real estate market, which is what we're all used to. So what does it all mean? And at the end of the day, we feel like we're at the low point of this real estate downturn. We think that, we look at the data, and it looks as though numbers have stabilized across the board on leading indicators. And so we feel like we're not going to see things get any worse. The question now is, when will things get better? And in order to predict, okay, when will that happen, we just need to see these major leading indicator components start to improve. And that's going to happen whenever the Fed loosens their hawkish stance on monetary policy. You'll then see mortgage rates come down a little bit. You're going to see consumer confidence remain high. And again, the sort of missing component that we need to see in Austin is we need to see jobs come back. We need to see these awesome tech employers start hiring again. When all of that happens, we're going to see Austin's real estate market just come back to its normal, sort of roaring market. We probably won't see another 2021, but we will see Austin's kind of normal market that we would see in 2018, 2019, things like that. When will that happen? Well, if I had to guess, we'll start seeing these leading indicators improve in the next 3 to 6 months. We'll start seeing them look pretty good by Q4 this year, and we're going to see the Austin real estate market look a lot better in 2024. That would be my guess right now, but just bear in mind we don't have a crystal ball. So if anyone has any questions or any thoughts, you can leave them in comments here. You can send me an email. We'd love to chat with you about your specific situation. So please reach out if you'd like to start a conversation about that. Thanks for listening. I'm Eric Bramlett with Bramlett Residential, and I hope you have a really amazing week. Thanks so much.